Hello, can you hear me? Oh. So that whole time, I don't hear your voice. Okay. So sorry, you guys. All right, I am back. So, okay, turn on your microphone. Got it. I'm so sorry. I was babbling on and on. Okay, that's good though, because I made a terrible mistake. So let's rewind a little bit. Now the thumbnail, I thought, okay, let's rewind. Good. So let's scratch the thumbnail. Just ignore it. Don't worry about it. So I'm glad that you didn't get to hear the 15 minutes of me just making a terrible mistake. Okay, well, real quick though. So what happened was, I thought this was like a kind of WTF, right? But come to find out, Nifty 50 was Indian stock market. Like, what the hell? So it has nothing to do with Gamestop. I just thought it was like, what the hell is this going on? But again, don't worry about it. Scratch that. Okay, so let's talk about the fundamental of the company, right? Of course, like we all know who've been investing in the company, we all know that the company has improved dramatically, right? And dramatically, it's a matter of perspective, right? Which side are you on? Which, are you a bear, a bull, or whatever you think is just a scam, whatever. I mean, take your position. Wherever your position is, stand on it and run with it, right? But my my goal is to at least kind of give you my perspective on things, right? On this company. And of course, I'm biased. Please understand that. I've been investing in this company for quite a bit. Have a, well, in my opinion, massive position, right? Most of my portfolio is in GameStop right now. Of course, I have a strategy moving forward. So that's why it's important to develop your own strategy, please, and understand what you're getting yourself into, right? So whether you think it's a scam or whatever the trading volume or whatever happened within this past few weeks or days or whatever, understand what the market dynamic is, right? I'm going to stress that over and over again. Now, for people who are new to this particular stock, you will understand that there's going to be a lot of information out there, and so be careful on the type of information that you get yourself into, right? And please know the difference. Now, this gentleman here, I've listened to him before. Very very educational, very knowledgeable about certain things, but that doesn't mean that he's right about GameStop at large, right? So I'm gonna react to this video. I know I just reacted to this video without my microphone on, so I'm hoping that that's what. Yes, I'm hearing all of you, right? You hear me? Diamond and GameStop. Okay. All right. So. All right, thank you for joining. Be more. Did you took profit? I took profit from my sister. So my sister got a 3x her money. Not the complete portfolio though. As for me, I didn't. So because I have a price point in mind that I will part. My last my 2 live stream, I kind of lay out at what point I will take profit. But for me, again, there's a certain amount that I will willing to diamond hand. And if that MOAS thing is happening, would be well more than enough for me to, to get rich off of this, right? But just in case that MOAS thing theory doesn't happen, then I will take some profit on the I call it a play, bucket that I have. So, a couple shares here and there, and to try to trim some off position, just in case that MOAS thing would never happen, right? But again, this is why strategy is so important to employ. And no matter what side you are on, only time could tell whether this company is going to be you know, taking people to that, status that we're all hoping for, right? Of course, my point of view is that what is it called? My point of view is leaning towards the company is healthy, right? It will be healthy and will be lasting for a long, long time. Okay, so there's no denying that the company is healthy. Okay, or at least the fundamental improvement of this company has been achieved already. Not to say that there's no struggle or challenge ahead of time, but I think leadership will show us otherwise, right? We heard about the preliminary result that came out yesterday before trading and all that stuff, and this is why the price action is crazy. But you've seen a lot of other video, and I'm not going to go through that, but let me just come at it at a different angle here, and we'll talk about it some more. But for this one particularly, I'm going to react to this video because I just think that yes, there's some truth to this video on the part of option chain and what's happening. And for those of you who have seen this video already, sorry, you might have to sit through this a bit, but let's see, let's go, and I'll come back and kind of like at every point. All right.
Hello, fellow Rebel Capitalists. Hope you are well. So let's get right over to CNBC and Zero Hedge, and we are going to talk about Gamestop. It's actually pretty difficult at the point. Oh, my finger's gone. I don't know where. I'm not. I'm not familiar with using these fake backgrounds, but I know this is what all the guys do on Reddit. That's for sure. So we are going to talk about what is happening right now with the meme stocks and how they've got some dark secrets that they really don't want you to know about. So let's go right over to CNBC. You guys are going to understand what I'm saying. And then we're actually going to go over to my trading account. And we're going to look at some option pricing right now. And I'm going to show you why the retail investor is getting ripped off right now as we speak. See, right behind me, this is the narrative. That's the narrative they want you to believe. These influencers.
Okay, so understand there's a lot of influencers in this space, right? So you need to understand who is who. If you are a fundamental investor of this company, you would please follow Moran's rants. I know some of you in here knows who that is. Fundamentally, balance sheets, dollar for dollar, whatever. Those are the diehard investor. And, I'm in that camp as well. I'm a hybrid, right? There's a portion of influencer, so to speak. Of course, Marantz is just one guy who, been talking about this company for a long time. In the fundamental sense, we learn a whole bunch along the way. The same way for me, right? So fundamentally, obviously, that's the narrative, right? I mean, I hate to say narrative because you could see it in the balance sheets, right? But to say that there's no fundamental, improvement or there's nothing behind that, that is false as well. And so, with that being said, though, I do agree with him about the option chain shenanigans that's happening. So let's listen in.
Like Portnoy's on board right now, or Andrew Tate is on board right now. They want you to believe, and I don't know the Hello Kitty guy, but who knows? You could probably put him in that bucket as well. They want you to believe that this is kind of a David and Goliath story, right? They want you to believe that, oh my gosh, GameStop is this incredible, amazing company. That if it weren't for those stupid hedge funds, it would be doing all these amazing things for its shareholders, not realizing that the hedge funds are really the ones that are benefiting, and the big banksters are benefiting from Hello Kitty, or Roaring Kitty, I just call him Hello Kitty, going out there and tweeting.
On October 19th, 2023, Wells Fargo warned its clients that all checking accounts are likely to be replaced with digital.
So let me show you what I'm referring to here. And then just look at this through the lens of the narrative that you hear on social media. That, oh, this has nothing to do with the number. We're just sticking it to the man. We're just sticking it to Goldman Sachs. We're just sticking it to the financial industry and all these hedge funds. Okay, let's just put that.
Keep in mind too, there's a lot of hedge funds out there that are long, shorts, and short and long hedging. All they care about is making money, right? And so this is, again, you have to separate yourself from that. As an investor, of course, we've been accumulating that, this share for a long time, right? So we're going to be able to stand to benefit from this price fluctuation. And eventually, these type of things is going to discover the price for GameStop to that ungodly, well, in my opinion, right? Again, I'm not saying it's going to happen tomorrow, but in time, years, decades on end, because when the company improve slowly, right? And I think this is why Ryan Cohen was kind of issuing shares to try to improve the health of the company even more, right? Okay, if you want to spike up the price this way, we're gonna, take advantage of the price action in order to, improve the balance sheets of the company even more. Okay. Now, in my opinion, they're gonna be trapped, right? They can't spike it up because if they spike it up, GameStop gonna gain gain, massive amount of money, right? Assuming that they haven't sell yet. Now, there's a lot of YouTube video out there assuming that they already sold. So I don't see that happening yet. So, but we can't only I'm not sure until they file the, actuals, security or whatever. Until the filing of the next, okay, we sold at this level, we got this, the share offering is complete. So until then we'll know the number. But as of now, I'm going to assume that they have not sold yet. But anyway, so go back to the price fluctuation thing. I think what leadership has done, by doing the at the market offering is very smart, very smart. But anyway, so if the price spike because of the market manipulation, option chain, gamma ram, or whatever, this institution battling each other to try to get the price or try to get shares or whatever, covering or whatever, right? GameStop as a company is going to benefit from that price action, okay? And so no matter what, it's a very smart. Now, if they spike the price lower, what do you think is going to happen? You think, like, all of a sudden we'll stop buying at this price point, right? Again, like, I'm so happy that it's actually like gap fill that thing, and I'm ready to load some more. Not substantially, I'm a bit kind of dry on cash right now, a little bit, but hey, I get paid every 2 weeks, so. If they bring it down to 10 or even 15 or even down to this one right here, when they do the earnings right here, right? If they were to bring it down to this level, people are going to load it up even more. And so to me, they're trapped in that sense. Now, this particular indicator hasn't shown any short interest. It used to show about like 28 or 27%. A couple weeks ago, I did the video. One of my live stream kind of showed the number there. So if you want to go back to kind of check out that one. But yes, 27% at one point, right? And of course, I'm sure some people sold up here. Some people sold and take their profit. And then again, but to me, those are just traders. Like, they are trading in and out, taking advantage of the price action. Sure. Yes. I mean, I'm not faulting you if you're selling and taking profit, but then don't, for people who bought up here, try to chase that, that train. And now that the company or the price action coming back down to 22, you're saying that the company is a scam. Well, then you're missing out on the actual fundamental things, right? And so that's why I preface it by saying, please choose your quote unquote influencer wisely and understand why you got into GME in the first place, and have some strategy moving forward. And this is why I do the way that I do, So anyway, I mean, for me to have the conviction to buy it at $10 while people are telling me to sell at $10, think about that. It's require a little bit of knowledge, no? I mean, come on. So, but anyways, let's go back to this video.
To the test. Let's actually scrutinize that for a moment here. So we go over to CNBC. We're going to start there. And wouldn't you know it, AMC completes a $250 million stock sale during meme rally. Shares jumped 90%. So you see what's happening here. Now, I'm not saying there's anything nefarious, but would it really be shocking if AMC calls or GME?
So he prefaces by saying GME, right? But he's showing AMC. What the hell? But anyways, listen in.
Or whatever, calls Hello Kitty and says, hey, dude, you want to do us a favor? I mean, you're on board with everything that we're doing, right? Oh, yeah. You guys have a great business model. I love you guys. Okay, well, do us a favor. And if you could on Monday, just go ahead and start tweeting again. You don't have to say anything, so you don't have to worry about getting in trouble with the SEC. Just do a couple videos, like the gladiators or the guys in 300 that are standing up against the forces of Persia or whatever it is to get the resale investor really hyped and create more hysteria. And, we'll kick you over 10, 20 million. And again, I'm not saying that's happening, but even if it's not happening, the net result is really the same, except for Hello Kitty just ain't getting paid.
And keep in mind too, Roaring Kitty never mentioned anything about AMC, right? He wasn't in AMC. He was in GameStop. So again, this is the narrative that these two stocks are the same. And again, it's a media manipulation to try to steer you away from the actual company of GameStop. And again, GameStop is improving, healthy, okay? 3 years ago, it was worse than it's today. Today, balance sheet it's kind of like an IPO, right, type thing. If you have an IPO, the company just IPO today, and you don't know anything about GameStop, you don't know anything about the company itself, and they present you, hey, I'm IPOing. What price would you bet that the bank would sell it to you at? Do you think? I dare you. I bet you anything they probably would sell it to you at $60. With the balance sheets that it is today, 10 times its book value. In my opinion, anyway. But any IPO out there that do not have the same balance sheets as the company currently. So, but anyways, so he's going on about AMC here, showing about AMC to tether it to GameStop. So let's see if he talks about the fundamental of GameStop right now.
So that's just the only thing that's really different in the equation or the outcome. Because what's happening is AMC is selling all of this stock. And who do you think they're selling the stock to, by the way? You think they're selling it to the hedge funds? No, they're selling it to the retail investor.
Well, this time, AMC is selling it to retail investor. But other times, when APE was issued, do you think they sell it to retail investor? No. They sell it to hedge fund in the backdoor deal. And again, for people who are new to this, please research about AMC versus GME. These two are not the same. These two stocks are not the same. Please be educated. And there's a reason why Ken Griffin, mentioned AMC and GME at the same breath. Okay? And that's why people, I'm sure he has good intention. I'm sure he believes in the whole narrative and he has his own perspective on things. I get that. I respect that. Sure. At least you have your own perspective. But I think even highly educated people who normally don't listen, like if you listen to his video, he usually don't listen to the mainstream media, right? So even them could be misled into believing a certain way about the company. And I'm sure he doesn't care about the company, doesn't care about GameStop. He doesn't care to invest in it and all that stuff. Because of the balance sheet that it used to be, right? I'm sure of it. Because, they're losing money. They're whatever. But they don't believe in the company in the long term, right? Like we do. care about the company from the fundamental level. And of course, all the short squeeze, it's fun to see if it go to that route, right? And of course, I'm kind of leaning towards that, right? But again, at the same time, I do have a strategy moving forward if it doesn't go that way. And we'll take advantage of this price action as well, just like how the company is doing right now. But no matter what, again, this company will be around for decades on end. Brian Cohen is here to improve the fundamental of the company. You know why? Because he's a shareholder as well. So it's ridiculous to say that, Brian Cohen is the same as Adam Aron. It's night and day. And again, the same narrative here being played out.
Right. So the retail investor is sitting there holding back. And by the way, do you think that AMC is somehow holding on to these shares? I would be shocked. So here's the game. AMC sells 250, or what was 250 million worth of shares. Let's see how many shares they actually sold. 72.5 million shares. So they dump 72.5 million shares. People always talk about the Fed printing money and how this is so unfair for the average American and blah, 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 because it creates more currency units that are chasing goods and services. How about when AMC prints 72 million shares and dumps that on to the retail investor in one day?
I agree with all of this, by the way. So
in one day. In percentage terms, this is 1,000 times worse than anything the Fed has done. And who, by the way, once they sell those shares, now they own those. So they sell those shares, they've got the money, right? And who's holding those shares? Like we said, the retail investor. But the retail investor is.
Need quick cash? Watch how I turn my junk car into money in no time. I'm showing you how ridiculously easy it was to.
Okay,
getting whipsawed back.
Sorry about that. Let me go through the chat real quick. Thank you guys for joining. Okay, take profit. The next few weeks will be exciting. Buckle up, Sub J. Sub Mike. Yes, the company is healthy and will be in for a long haul. Potentially looming squeeze is just a bonus. Yes, of course. And again, to me, my opinion is that it's going to be multi-year squeeze here, and this is not going to ever end, because to me, that's a infinite money glitch type thing, right? For people who are trying to bet against this company, and retail will bet against this as well. Not just institution, but because they're dumb, right? Dumb, in my opinion. Well, they probably think that we're dumb as well. So it's a equal amount of, sentiment here, I'm sure. But that's the nature of the market, right? We need to, at some point, they have a way to kind of see all those data. I'm sure the institution is coming in for that reason, because they see that opportunity as well. These people are greedy, and all they want is just making money. Do you think they're going to care about the actual company here? They're just here for the in and out price action here, right? And so that's why I don't care if people are taking profits or whatever, right? Because that's going to give rise to the price discovery that we're going to see for long-term investor who have been accumulating their shares. And this is why, again, I have that moon back, so to speak, to, seek through fruition. I'll show you my diagram in a minute. So what my strategy moving forward is, again, just to clarify, what I'm going to do within this, run. And every strategy, every market participant will come into this stock once again. And when it's popular, that's when you see that crazy price action. And I'm prepared for all of that. To take advantage of all of it. I took some profit for my call option that I did, sold way too early, obviously, but I was happy with that small profit. It's fine, because it's my small trading account, and I'm trying to grow it, slowly. Of course, regretting selling way too early, but it's okay. I sold for, 10%. And again, and this is why I do my strategy of a long-term hold as well, because just in case I'm dumb enough to sell way too early, I get the runner, so to speak. They call it a runner. But yeah, know who you are. If you understand the option chain and you could take advantage of that, go right ahead. To me, the more money I have, the more shares that I'm gonna have for that long-term back that I have. Okay, but let's finish off this one real quick. I told you Moran's is right now. Wait, I told Moran's you're on right now. Okay, thank you. Appreciate you. Okay, Michael, thank you. Amber, thank you. Get in on the gamma ram, stay for the squeeze. Okay. Yeah, be careful with that gamma ram thing. AMC, avoid at all costs. Yes. I fell into it, obviously, like before, but I'm sure newcomers will come in and get trapped into this as well. So, right now, I think because of Moran's channel, it helps a lot of people. You know, he helped me with AMC, of course. You know, so we're a lot wiser investor in GameStop. So we're not going to be defeated just because people are just don't understand how this company is doing so far. But I don't know if this is the end or not. But in my opinion, like I said, it's going to be a multi-year, long, drawn-out squeeze here. So it's remain to be seen. Remain to be seen. But yeah, okay. Kitty was always here. He was just roaring again. Okay. Kramer, Patcher, and Citrons was talking negative. Of course. This is extremely bullish for GameStop. Sure. Don't let the mainstream media financial fool you. GameStop is a great play. Of course, of course. And again, this is why I'm so convicted. Like, you know, I'm gonna speak the same way. This same thing over and over again. If I listen to any other people without my own conviction, I would not add more at $10, right? I would not be buying more to lower my cost average down so that I could take advantage of this run, right? And so that's why when people are telling me, oh, dollar cost averaging down is a terrible strategy, well, it's my strategy and it's working for me. Because I do have a job, right, that I go to, and, you know, and people are like, well, you should be learning how to trade. Well, okay, I did learn how to trade, and I was not that successful at it because I'm not good at it. So if you're good at trading, then why are you trying to get me to be good at trading? And if if I'm not good at it, why are you telling me that I'm dumb and stupid? You see what I mean? So again, those type of taunting, they want you to buy and sell in order for them to benefit, right? Because that's the only way that market maker, option trading, option buyer, option seller get to gain from you. Yeah, that short-term liquidity that they need in order to, you know, survive for another day, so to speak. Okay, but as long as you understand all those dynamic, you're gonna be fine. Like I'm, you know, learning as I go, and of course I'm gonna benefit from this run, you know, and I've been waiting for it. You know, learning how to do option, learning how to do cash secure put, those types of things is also you know, beneficial for me to accumulate more shares in the long run, right? So again, I welcome all of the types to be here, right? Whether you're traders, whether you're option buyer, whether you're whatever, because this stuff is going to give, you know, GameStop even more clout, so to speak, right? Whether you think it's a scam or not, you know, because if you think it's a scam, you're going to short this thing, right? Think about it. And the more short you do, the more fuel you add to the fire. So I dare anyone to short this company now, right now, like $22. You think it's going under? Short it, please. Do it. I dare you.
Back and forth by just insane amounts of volatility. And oh, by the way, what do you think AMC is doing right now behind the scenes? You don't think they're getting ready to dump another $72 million a share or another 72 million shares on the retail investor now that the price is up $10? And when it goes to 20, let's keep doing the same thing over and over and over again. And where do you think the $250 million is going? It's going from the retail investor's back pocket in to the CEO's back pocket.
Adam Aaron. Yes, CEO will Adam Aaron, have taken from CEO, from shareholder. But nowhere did he say about GameStop. Oops, sorry.
It's going into the financial insiders' back pocket. It's just, but yet the retail investor thinks that they're sticking it to the man, even though they're just putting money in his back pocket. Why? Because they just see memes like this, and they see guys like Hello Kitty and Portnoy and Tate coming out and saying.
And again, AMC has nothing to do with Roy and Kitty. Okay, please educate yourself.
Hey, we're gonna stick it to the Matrix. Are you with us? Yeah, battle cry. Yes, buy. Forget the fact that the money's just going to the back pocket of the CEO. And you're just holding the bag. And forget the fact that I'm just promoting this. Forget the fact that Dave Portnoy went out there and bought call options this morning. And he knows he has, let's be real here, he's got tens of millions of incels that are hanging on his every single word. And he knows darn well that if he gets on board with Hello Kitty, that share price is going to moon even further. And what's going to happen to his call options? They're going to go way up in value, and he's going to cash out when the volatility spikes and goes through the roof. You think he cares about the incel guys that are following him? Absolutely not. You think he cares about hedge funds? Come on, guys. Let's get real here. Let's get real. He cares about one thing, the number going up. Same thing Tate cares about. I mean, I don't know these guys, but let's just call a spade here. I mean, this is not sticking it to the man. Because if they were actually honest with you, if these influencers were honest with you, they would tell you the things that I'm telling you. They would sit there and say, yes, you're buying all these shares, but it's not hurting hedge funds, for heaven's sakes. It's helping the people that you're trying to destroy. And by the way, why on earth would the hedge fund, you think they're stupid? So the way they paint this picture is that these hedge funds are just these mindless, like zombies that just have to go around and short. I must short AMC. I must short GME. Must short.
GME, yes, but not AMC.
Must short. I mean, come on. You don't think they're taking the long side of this bet? I mean,
yes, they will take a long side on GME, and that's what we're looking for. Institution will be forced to buy this stock because of the fundamental of GME, not AMC, obviously, because nobody's looking to buy it. You know why? How I know that? Because this time, Adam Aaron offering it to retail. Okay, Adam Aaron. There's a reason why he's offering it at the market offering this time, because no institution was willing to buy into that. But for GameStop, though, they're inching, their position, again, small, little incremental positioning here. And that's why, again, they're spiking up the price to try to see how many people would be willing to sell at 80, right? And again, nobody sell, right? Nobody, I should say, some people took some profit, but the majority shareholders did not sell, did not. I didn't. I still have the majority of my position here. So, yeah, and the institution will take a long position on this eventually. I'm sure. I think. Because of the filing that's just happening a couple of days, yesterday, I'm sure leadership know this, and I'm sure leadership is setting up for institutional investor. That's why they, have so many, warrants, prefer share, and all that stuff to try to get institution to get in on this. And for people who are shorting this thing, again, there's only a handful of hedge fund here that we're fighting that are shorting GameStop, not the majority. The people that are long into this company is going to stand to gain so much. And we're just sitting on the boat and like a drop of the ocean type thing, waiting for that opportunity. And retail spotted this company way earlier. We are so early into this company, you guys. That's why, again, I have my long-term back holding. Moonback type thing that I'm willing to hold forever until a certain point.
I wouldn't be surprised if the hedge funds were paying off Portnoy. Why wouldn't you? If you're a hedge, as if the only thing a hedge fund can possibly do is short GameStop. I mean, come on. You guys, do we honestly want to believe that these quant hedge funds, with their billions and billions and billions of dollars worth of resources, aren't mining Reddit to determine when this thing's going to go off? And they are buying call options all the way up. They're getting 1,000 times richer than the average investor, but they're doing it in a way that's going to make them money. Where the average investor, the retail investor, in aggregate total is going to lose, because they always do in these kind of games. Even if the price goes up, they sell at the wrong times and they buy at the wrong times. Let me show you exactly what I'm referring to.
Yep.
Here is, and by the way, whatever I show you right now.
See, he doesn't go into the fundamental of GameStop, right? The fact that AMC insider don't own any shares, but if you look at the insider for GME, they own a whole bunch. I mean, really? Again, please, if you listen to any influencer telling you AMC is the same thing as GME, looked into the actual leadership, themselves. And to compare the two, it's just so ignorant, right? And I just saw a post from Bigums, at every chance he gets to kick on GME. He's like, to say, see, GME is diluting and all that stuff. Again, the terms that they use sometimes, I'm like, really? In 3 years, they have not diluted. Now, quote unquote, that they are diluting the fact that they don't even need the cash right now. It speaks volume. Who's who? Like, why are they steering you to buy into AMC rather than GME? And they have a whole bunch of people. I just saw one with Tony De Niro too, the one video, live stream or whatever, like assuming GME already dilute $1 billion, okay, and then revenue missed, all of those negative terms that he's putting out. Of course, like every single turns he gets to promote AMC, he's going to promote it that way. So again, to me, that's clear to me who's. And please be careful if you're listening to those people. Understand where you're coming from. Understand where the difference, at least, right? And so again, he doesn't even mention anything about GameStop. So let's see if he does here. Was
10 times worse about 45 minutes ago. Because what happens at the beginning of the day.
There's so many ads. Gosh.
The trading day, and usually at the end of the day, the volatility increases massively, especially when you have Dave Portnoy, as an example, coming out at 8:30, talking about he's just waiting to buy at 9:25, implying that all of his minions should do the exact same thing, right? And Josh, just help me out, because you know options better than I do. What happens to the price of options when the volatility spikes?
They skyrocket.
Ah, that's right. They skyrocket. Now, can the price, let's just assume for a moment, the price of the stock is going down, but the volatility is skyrocketing.
Yeah, but the
Then
price
what will then happen?
The option's still going to be going up.
What's that?
The price of the option can still go up.
Ah, okay, great. So now let's assume the opposite. Let's assume that the price of the asset, or the price of the underlying stock, goes up, but volatility goes down. Now what's going to happen to the price? Likely.
Could go down.
It goes down. It absolutely goes down. So let me show you this. If we go over, and Josh, you're going to love this. If we go over and look at, let me refresh.
I don't know what.
And again, what the concept that I'm showing you right now was 10 times more extreme about 45 minutes ago. So we'll just look at GME. We'll do a call option, buy to open. So we're buying a call option, $49. Okay, so to buy this call, and this expires the 17th. So this expires in 3 days. That's I can't, for whatever reason, I can't do same day or whatever, because that would be an even better example. But we're 2 or 3 days out here. So a call option at $49. So basically at the strike right now, or the current price is, we'll just say $12.80. So basically $13. Okay, so if you were to buy a call option at $57, you would assume the price would be way, way, way lower. I mean, it would have to be, right? Oh, $10.75. $10.75. And I wish I would have done some screenshots like 45 minutes ago, because the price of a call option, a short dated call option that expires in 2 days, basically, the price to buy at a $57 strike price was almost the exact same as it was to buy one that was in the money. Did you see that, Josh? Oh, he's not. He's doing something else.
See, this is why, option seller stand to gain. And who usually sell those option to? To you? Whoever buying call option or buying put option. When you say, like, when people say, oh, my put is printing. Okay, at what point are you? The same way with puts. Like, oh, I'm shorting this. My put is printing. Unless you pick the right strike days and, the price point of which, in the money put or whatever, you might not even get to gain anything. The fact that people coming, taunting, people like us who are investors, right? Instead of like just gambling on call option or put option on whatever side. Again, these are people who just betting on the price. That's it. And what they don't realize is that the market makers are the one who set those up. And he's going to explain in a minute. Who give you those price for those options. Okay? And so you're trying to do the gamma ram by buying call options and all that stuff. Only institution would have that much money to do that, to do the gamma ram. So retail do not have that money, because you see how expensive those call contracts are, right? So to say that retail was the one who rallied the price was not correct. And the news doesn't want to tell you that. Like, they rather run the other story. Oh, Ron Kitty tweet does this, and every single people jump on in the same narrative, right? So this is the proof right there.
All right. Anyway, let's go back to this. So what does this tell you? And by the way, let's go down here and look at the volatility. So again, that volatility goes into the price. Oh, volatility, a mere 373%.
That's a lot.
So let's just assume for a moment we go into the lunch hour, where likely.
Just to put in reference, this volatility, this is implied volatility. When you see that price spike, the option will be more expensive. That's what it means. Now, just to reference this, okay, for option buyer, usually 20% is the max, meaning like that's high for option buyers. If you see any, option that is even, more than 60%, that's like way, way too expensive, in reference. Of course, like the more popular the company, the more, they would charge for those call option or put option. And so to have 300%. Now, on average, I've been kind of like monitoring, the call, the implied volatility for call or puts or whatever, just to educate myself, right? Ever since that price spike for 3 years, I've noticed the call option is always above 80%, 90% implied volatility. So even the leap option, if you were to look at it right now, it's 100 and something percent, right? So it used to be like 60%, no, not 60, sorry, 80% for GME. Talking about GME here. So it's becoming expensive for you to do that gamma ram that it used to ensue the price action, right, for the last 3 years. And this is why this is institutional. Okay, this is not retail, because institutions are FOMOing in right now because they see these opportunity to make billions of dollars here. Okay, and again, if you're smart, you have a strategy moving forward for, and I'm sure Ryan Cohen knows about this too, and preparing for that gain, for that share offering, and if he could do $3 billion. Oh my goodness. Can you imagine if GameStop had $4 billion in the after the end of this year? Man, or before the shareholder earnings. I mean, the stampeding to get this company would be ungodly. So again, just patient, right? Depends on how much they're gonna get out of this share offering. We're gonna be fine. And no matter what, like even if they could just do $1 billion out of this deal, just do the at the market offering, and there you go. You get $2 billion. I mean, come on, that's the least, right, that they could make at this price point. Now, if they spike it down even further, then that means retail will scoop it up and buy it at a lower price. I mean, you think 40 million shares is so much for us to kind of gobble it up? Of course, we're going to buy it. So
volatility will decrease. Okay, so let's just say the vol goes from, and remember, the volatility on the S&P 500, just to give you some context, is like, I don't know the exact number, but it's like 20, 15.
There you go.
So therefore, and keep in mind, the volatility impacts the price almost, or maybe even to a greater degree than the actual price of the underlying stock itself.
So it's cheap. What he's telling you, it's actually cheaper to buy straight up stock, right? The price at that given time, obviously, but of course, if you just jump in at 80, you're not gonna be happy right now at 22. But again, you should have gotten it at 10, right? You should have come at it at a fundamental level, and then you understand why this company is so valuable.
So you've got the volatility.
I'm talking about GameStop here. I'm not talking about AMC, okay? Just to clarify.
Just making the prices of these options skyrocket just to ludicrous levels. And then you have all of the market makers that are doing what? Or $11, or if you want to pay me basically the exact same thing for a $57 strike call option as you would for one that's in the money at 45 or 49. Hey, I'll sell that to you all day long.
And oftentimes they do a naked call option sell to you. So they don't actually have shares to do that. And that's why you've seen a lot of volume into the option chain to sell you those two, expiring, like, was it 0 day to, what is it called? 0 day to expire something. And they just they call it slap the bid, right? They're just like, selling them like candies, thinking that the price will not spike. Now, this is the dangerous point, and that's why you see short interest going nuts, because market maker usually sell those calls to you without having any shares on hand. So, yeah, the dynamic is you have people who are investing in the company. Think about it. People keep buying no matter what the price. Right now, I have a price point in which I'm not willing to buy more. But again, I'm just trying to protect myself here. I'll tell you in a minute. But, that's the dynamic here. And people don't understand this, the RAM and all that stuff. They think it's just retail, and the news not telling you the correct order of things, right? I'm not surprising that they don't, but, that's why you need to educate about this particular stock if you want to get involved. If not, you just sit on the sideline and enjoy the show, right? And so there you go. But these type of things happening all the time. And so it's remained to be seen. And all of these calls, let's say, that's why if it's in the money, they have to go on the open market to buy the share back eventually. Shit. They have different ways to, combat that. But we'll see. Anyway.
So you see what's happening are the market makers are just increasing their price. They're just increasing their price to a point where it deters the buyers from buying. And they increase their price to a point where the probability is almost zero that they lose money. Therefore, the probability is almost 100% that the retail investor loses money, even if the share price goes up. So who at the...
See, this is important. See, this is why buying call option, short dated one, or at least, any type of option, even the leap one too, you could experience the same dynamic here. Even though you're right on the direction of the stock price, doesn't mean that you're going to make money off of it.
The end of the day is winning. Is it the retail investor? Or is it the market makers, i.e. the big banks, the hedge funds that know how to play this game, or the retail investor? Now, if you want more proof, let's go over to, and by the way, I'll bet you AMC is even more extreme than GME. But let's keep this video going here. Let's go over to Zero Hedge and get some more details here. Actually, I'm going to go back to CNBC because there was something there at the bottom of this article that I wanted to show you guys. So I'll just read this whole last paragraph here. So Roaring Kitty, the man who inspired the meme stock mania 2021, resurfaced online cryptic image showing a man in a chair leaning forward, and then he did a few other videos. The video game soared more than 100% on Tuesday. It's today. It's 100% higher than it was yesterday. And then look at this. Going back to AMC, who do you think was making the fees for selling all of those 75 million AMC shares to the retail investors? Oh.
This is important. This is important. Again, this is related to AMC. This is why it's different from GameStop.
Well, look at that. That would be Citigroup, Barclays, B. Riley Securities, and everybody's favorite Goldman Sachs. I mean, and who do you think is going to be making the fees and stuffing money in their pocket when AMC or GME or whatever sells another 100 million shares tomorrow and the next day and the next day after that? You guys see how the game is played. It's rigged. It's rigged. I absolutely agree. The game is rigged against the retail investor. It is. There's no disputing that. But all Hello Kitty, Portnoy, and Andrew Tate are doing, whether they know this or not, I'd be shocked if they didn't know this. All they are doing is increasing the disadvantage the retail investor has. They're not on the side of David. They're on the side of Goliath. And every single time they come out with a meme, like the one right behind me here, all they're doing is playing Goliath's game. All they're doing is playing right into the hands of the big banksters, the hedge funds, and the CEOs that have run these companies straight into the ground. And they're all laughing all the way to the bank. And even if Portnoy or Hello Kitty doesn't really realize what they're doing, the big banksters are sitting back just like Scrooge McDuck. They're just diving into their big swimming pool full of gold coins and just doing the backstroke and say, yeah, Portnoy, go Portnoy, woo, go Hello Kitty. Throw out some more of those memes, guys.
But anyway, so again, like I disagree with most of the, I agree with most of the, points here about AMC, but again, nothing about AMC. Nothing about GME fundamental here that is kind of driven by the FOMO type thing. Again, people have been investing in this, and I've made video about this, back in April 6 here. And we knew about this already. The gamma ram didn't happen because of the meme, so to speak. It's because, again, the just for those of you who doesn't sorry. Why is the quality of this stream is so bad? What's happening? Okay. So again, the fundamental of GameStop is really, really something to contend with, right? Again, I'm talking about long term here. 10 years from now, 5 years from now, or whatever. Ever in the short term that they're able to achieve. It's actually fundamentally improving, healthy, right? Like Michael was saying here. And so that's the crux of it. That's what give rise to be like, okay, $10 is pretty good price point to get into. And if you look at the price point here, this is when I make that video, and if you want to check it out, you could do that too. But yeah, so for people who've been following the progress of GME, we all know that the fundamental of this company has improving, and so short has no water anymore. And so that's why they are, creating that narrative again that, oh, it's not fundamental. Look, it's overvalued. And if you get into this, it's going to be like scam, right? If you think about it in that way, of course, you're going to miss out on the company for the long haul. And you wouldn't understand why the price is so stupid, at the moment in time or whatever. It's a blip, right? Now, speaking at the fundamental level, though, squeeze is not good for the fundamental of the company, so to speak, because then it overinflate that value of the company to the stupid level that we're all trying to wait for here. But we all know that Ryan Cohen is here for the long term. And he's not here to make $1 trillion tomorrow here. I don't think. And this is why, again, he's here for the health of the company. Now, the added value is, of course, the squeeze factor of it, because people are going to have to force buying into this company at whatever cost, right? That's the hope. And so understand that dynamic as well. Now, institutions going to make tons of money. There's a lot of people going to lose a lot of money as well. My point is that please have your own conclusion coming into this company, and don't get confused between AMC and GME. They're not the same. You think they run the same, but please understand the fundamental of it as well. GME has a real reason for that thesis to be killed, meaning company's going bankrupt, company's not making money, company is terrible, company is this, right? Company is struggling to make a revenue, which they could have a point there. But if you have the improvement year on year, but hold on. If you have this type of profit margin, right? It's like the goal is to have the operating expenses lower than the gross profit. We're pretty close. We're cutting close, right? Now, I'm only assuming here because we don't have the exact number. But currently, we're about $40 million short of that. Back in Q4, we were plus. So our operating expenses is a lot lower than our gross profit. So that's good, right? This is what we're aiming to get to, right? And keep in mind as well, every first quarter is the worst quarter for GameStop. You understand that, right? Business cycle, right? You can't make money every quarter. And if you look to the past, right? See, first quarter is always the worst quarter for GameStop. See, well, this one, they make some money. But again, it's based on the release of games and how many people would have the money to do that. We all know that the economy is doing not well, right? Of course, it's well for people owning asset, but people who are working 9 to 5, we don't have much money to, spend here. The fact that we're in a discretionary spending as well category, it's kind of hurting us a little bit here because it's not in the category of needed, something that people need to survive. This is just a play money type thing, right? In terms of like the industry that we're in right now. So, no wonder the sell has been going down. Revenue has been going down. And we did a whole bunch of, I'm talking about we. The leadership has been doing the right thing for a whole 3 years in order for us to get to this point. And so to say that somehow Ryan Cohen is the same as Adam Aaron, it's different. It's different. The stark difference between the two is I don't know how people could compare Ryan Cohen to, the news media wanted you to compare him to that. So that's why they put AMC alongside with GME the same way. So just know the difference. If you want to get in on it, be careful. Don't sell your house. Don't YOLO to call option. Jeez. Be smarter than that, and understand the position that you're in. And if you want to get rich quick, that's on you. And then if you lose money on the run of this GME because you think, oh, you're gonna, make gazillions of dollars jumping at $1,000 a share, well, be my guest too, right? I'll be selling it to you at $1,000. So, because why? I understand the fundamental. I understand why the price is going crazy like that. And I'm doing it to protect myself, right? For the long run. I have, again, this is what it's all about, right? To try to detect the trend before anyone else. And I think we did pretty good here, right? But again, long-term investing is always a way to go. That's why Warren Buffett, I keep bringing Warren Buffett, and of course, there's a lot of people who are commenting on my channel from time to time. It's like, oh, if you only think, if you only know what Warren Buffett think about people like us or whatever, you wouldn't bring him up or elevating him or whatever. It's like, no, I'm elevating him because I don't know him personally. I don't understand, his, true intention or whatever, but based on what he is able to achieve, right? He's a long-term investor type of guy, right? He's not, predicting price action in every stock that he ever got into. Not to say that he get it right all the time either. I'm sure he got something wrong, right? But the idea is that to be consistent, consistent in your investing career, right? Or whatever, endeavor. If you pick the right stock or whatever, you need to know the company at large, the leadership and all that stuff. Very important, very important. So, all right, Giga Helm. I feel like you're Giga. Sorry. Getting information from article is not really proper research. Why is George being assassinated? I wouldn't say that. I know his. I'm sure he has a strong opinion about this type of company. I am sure the reason why he doesn't look into GameStop as closely is because he's already a millionaire. He's, in his opinion, he already made it, so he doesn't have to pick the individual stocks, so to speak, like us, right? We're trying to grow our wealth here. And so in order for us to do that, we have to do more research onto any company that we're picking. Whether right or wrong, it's your own conviction on things. That's what matter. For him, he's just looking at the macro economy. I'm sure he probably have some people who invest the money for him, so he doesn't have to worry about that. And on top of that, he has, some other income. So again, it's not that he's ignorant or anything. I'm sure about the fundamental of the company. It's just that he hasn't been following it like us, who have really added the value of, we see the value of GME in a different way, right, than most meme stock investor out there, right? Because when they say meme, they want you to jump in all other direction, including that tokens, out of nowhere. It's like spike up 50,000% or something like that. No, 50,000, no. Of 5,000% on the same day. And so, yeah, people, when they chase something like that, like Dogecoin and all that stuff, again, it's all meme related here. And Bitcoin has been up. Like if you look at the Bitcoin, right here. Bitcoin price lately, it's been spiking again midday here. But yeah, weekends usually the the place to be here. It's trading 24 hours, but it looks like it's doing that retesting of that all-time high, and it's ready to take off. I don't know. Again, I'm not in this quite yet. I was waiting for that drop, but again, it might not even be dropping. So perhaps that's a technical bounce here. 100,000 perhaps. I don't know. But the GME coin is going to take to take some of that gain. I'm sure, again, I don't understand why the SEC allow that to happen, but somewhat do understand that. Of course, they're probably in on it too, right? Who knows? I'm just speculating here. But here's the thing, they touting, oh, we're trying to protect investor and all that stuff. This is the direct effect on on GME, like publicly traded company. It's not being protected by the SEC whatsoever, by having this coin exist, or on the blockchain or whatever. So they have the ability to stop the trading of this particular one by just issuing a, lawsuit or something, right? But yet they still have it there. But again, remember, XRP is being in a lawsuit with them because, unregistered security. But this is much more harmful for GME, but they don't do anything to protect that at all. But anyway, if you're in this, right, whatever, please be careful. Again, nobody's shorting this thing, right? Nobody shorts this thing. So for you to try to short squeeze this, what are you talking about? Like what? It's a GME coin, okay? Again, let me preface this by saying nobody is shorting this coin, this token here, okay? So don't be fooled. Now, if you want to get in, that's on you, but don't blame it on GME. On GME as a, it's the scam of the company. It's like the company is trying to do the best that they can in order to make a better business here. So know the difference, and then you won't get burned. Okay, 10 years from now as the holding company, $500 a share minimum. Okay, we'll get there. I trim back on everything in my life so that I can put as much as I can into GME and learn to live. Yes, yeah. I mean, I've been saving like crazy. I've been stashing on shares like crazy because I was getting ready for the run, and I understand a lot of people are going to come back to this company eventually, right? Because 3 years ago, people on the media is already written us as like, it's already over. But all of a sudden now we're back. Like, I thought everybody sold. I thought everyone was done with the play or whatever, quote unquote. How do you explain the price spike right now? I mean, come on. It's ridiculous, right? They always blame it on the wrong thing and try to mislead people into thinking a certain way. So you have to be so vigilant on any information that, even coming from me, I could be wrong about a whole bunch of things. I could misunderstood thing. I could, telling you the wrong thing. But again, protect yourself at all costs. I know a lot of people are saying diamond hand here, and I agree with you. I get that. But not everybody have that ability to do that. So if you put your life saving in here and thinking that it's going to be like a gazillions of dollars, then you don't understand the what is it called? The battle that you might have to, what is it? The longevity, you might not see that money back, right? And that's why you have to think of it as a long-term investment type thing, and then get in it at a certain price point that makes sense to you, right? And again, this is why I'm here. I feel like I'm pretty level-headed in that sense because, hey, I have some experience here. I'm not just getting in this just because a tweet did this. That's the misconception that people would love you to think. And again, I've been trying to preach this to people that I care about, people that I know many years ago, and they don't listen. Some of them think that I'm crazy, but hey, it is what it is. I see an opportunity here, but they didn't see anything, so that's on them, so to speak. Okay, Crab already sold the house. Michael, no, don't advocate that, please. Just kidding. Good. Whew. Give me a heart attack. Okay, 1,000 share isn't enough. I mean, I get it. Yes, I know that stupid price, a crazy amount of price point is that MOAS thing, right? And again, I think it's not going to happen immediately. I'm sure they're going to do everything they can to kind of slowly inching back into the company slowly. I'm sure they're preparing for that. Whoever's shorting this thing naked or whatever. I'm sure they will opening it up to unsuspected investor out there to take the fall for it. Okay. And so that's why retail's going to lose a whole bunch of money shorting this thing, thinking that they're right. They have the conviction that this company is going to go under. And so they're going to, adding on to their position. And again, if they sell the call naked, thinking they're going to make millions of dollars on the downside, okay, good luck. Good luck. I wouldn't, but if you're talented enough to do that in the downside, okay, kudos to you. But don't jump for joy thinking that you're gonna win out on the other side of it, because that could be addictive. And so just because you make some money a day, the next time you think you're gonna be so right, you're gonna lose at some point, because you can't predict anything, like that. And right now, long has the advantage here. Okay, people who are long this stock has the advantage due to the fundamental of the company. Okay, so I think I'm babbling pretty long. Now I usually kind of take a break a little bit here. Treasury bond. Now, in that prospectus, there was a mention of, the company could use a lot of those proceeds from the share offering to do all sorts of things, right? Acquisition, merger, whatever, right? But they also mentioned about buying, marketable security. So if they do, they would take advantage of 5%, right? Short-term one, close to 5% here. Depends on which one they're buying. Of course, 3 months has a lot higher one. And so, again, they stand to benefit those, like $1 billion. They probably would add, $200 million onto that. So now they have $500 million of marketable security. I mean, what could be wrong about that, right? If you have $500 million there and you get a 5% APY, what is that? Oops, sorry. Divided by 100. Hold on. Am I miss? Okay, 500 million. There you go. 500 million times 5%. What is that? That's a year, by the way. Yeah. Let's divide it by 4 quarters. That's $6.2 million a year if they have $500 million in the marketable security on that short-term, time frame. So whether the Federal Reserve is going to keep this rate this high or low or higher, GameStop would stand to gain some of that interest payment just by parking money on there, by doing nothing at all. And so to say that this company going under doesn't do anything for the fundamental of the company, it's misunderstanding beyond belief. I don't understand how people would still believe that. Again, the company is doing everything they can to protect themselves from the upside, the downside, the squeeze. Remember when I said squeeze is not good for the company? It's good for shareholders who's trying to take advantage of the price action, but the actual company is not good, because then the valuation of the actual company is being skewed by the price action, right? And so these media is going to have their way, to spin it. It's like, look, it's fundamentally not good. It's a trash company. It shouldn't be valuated at this point. And so they have the reason to short it and, even more. And so, yeah, I mean, the angle is there's so many layers to this company to understand the dynamic here. So, yeah, but anyway, so let me kind of run through my strategy here. I kind of write it on here for now. Okay, so if GameStop were to sell the majority of their share at at this price point right here, 45, which I think they can, because again, depends on the price action here. Of course, I'm assuming things here, right? That I'm assuming that in the next couple of weeks, price action for GameStop is going to be fluctuating wild and crazy due to those option activity. We all know that, whether gamma ram or institutional buy-in, who knows? GameStop's gonna, as a company, going to be able to kind of raise the funds. So if they could do it, hold on, if they could do it at this price point, even 50. Okay, sorry. Let me try this. $50 a share. Okay, so that's like 10x its book value. Okay. Oh. Sorry. There you go. So they could make as much as $2.2 billion, right? So, hey, can it reach that point? Will they sell at that point? Who knows, right? 3 years ago, we did a share offering too, and we were able to raise $1.6 billion. So can we do it again? Even just that price point too? That would be amazing, right? And so again, depends on how much they could rack up. I'm just assuming that they're not going to sell yet or haven't sold yet, because there's no filing saying, oh, we sold this much. They just file a filing, hey, we're going to offer this share from now on. So I don't think they sold before filing that they're going to sell the share. So to assume that they already sold is not completely accurate here, right? But let's say they sold at $20 right here. This is what they are going to get. Regardless, it's going to go straight to the company bottom line anyway. And so this is why we think that he's doing it to protect the health of the company, no matter what. Okay, so let's see. As I was explaining, so this is my strategy moving forward. I will have a certain amount of shares that I will hold forever until the end of time. No, I'm kidding. Until these things coming true. So S&P 500 announcement, right? Dividend announcements, fundamental improvement, whether incrementally or not. And what I'm hoping for is that the company would earn at least $300 million, $300 to $400 million a year, trailing 12, I should say. There we go. And anytime that they are above this, I might consider trimming a little bit here, but again, this is a long-term hold here. Now the rest, I have as far as adding to that position, moving forward, I already have a price point in mind in which I will buy at a certain price here. So anything above 50, I'm not going to buy anymore, right? I'm not going to add to the position here, or any trading account even. Like, again, just trying to protect myself here. And anything below 22, I'm going to do it at the same rate that I've been doing, which is $200 a month. That might increase, depends on how much I have on hands. Some months a lot lower, some months a lot higher. So again, depends on what expenses that I have that day or that month. And then anything in between 22 and 50, I'm going to slower my buying rates, right? So again, I think this is a smarter way to go about accumulating this year for the long-term hold here. And then the rest, I have my trading account, as I explained before. Those are going to be reserved on the price movement that I have. That I'm going to try to capture some of this alongside the company as well. So, the way that I view it is that I've been holding this company for a long time. So I have some things that I want to pay off. My goal is to pay off my car at some point. And so if I could do that, I could have a long-term, prospect of just, my car payment would go to GME anyway, eventually in the future. So that's going to amplify my share accounts here as well. Now, there's a lot of strategy out there. Like, of course, like people would be like, oh, if you had sold at 80, you could have bought it, have more shares today. So how, in hindsight, of course, like if I have hindsight to go back in time, of course I'm going to sell at 80, right? But how do you know it's not going to go to 1,000? You see what I mean? And so in hindsight, it's always 2020, but that's why you prepare. You have a strategy, right? Moving forward. Do you have it? And so you take advantage of those, missed opportunities, so to speak. I always bring it back to Bitcoin. You know, if I hadn't sold my Bitcoin, I would have had 2 Bitcoin by now, right? And, but I sold, right? I would have accumulated more if I, know the fundamental of Bitcoin. But again, in hindsight, 2020. And so this is why I don't want to, miss out on this opportunity, because somehow people tell me to sell this at a certain price point or whatever, right? So develop your own strategy. My strategy is, when it goes to 120, I'm going to trim some, 5 shares at a time. And then again, this varies based on the data. Of course, I'm going to, I could increase the increments here, instead of 120, I'm going to increase to 250. I don't know. Again, just random, just randomly increasing it. Now, if it gets to 1,000 immediately, I might reconsider this moon back here. Because if it's 1,000, yeah, I mean, I'm going to stand to gain a little bit there, quite a bit. And I could always come back at a lower price too. So yeah, it really depends. Like if the price spike to like what Giga is saying, like $500, right? I might trim a lot more than that. I know it's crazy to think it's going to go up to that level. And will they let it go up to that level? That's another question as well. But yeah, I'm going to stick to my plan though. 120, which is the all-time high, and ramping it up from there. Let's see. 125. 180. Again, this could change. Tomorrow depends on how crazy the price spike is. Can you imagine if GameStop was able to sell some of this at $100 a share? Can you imagine that? $4.5 billion straight to the bottom line. So then they would have $5 billion in cash on hand to do whatever they please. So I really hope the actual company is going to be able to sell at a very, very high price. Very high price. So, all right. I'm getting to the end here, you guys. Thank you. Hi, Carter. Thank you, Bimore. Again, we'll have to run this back later. Oh, thank you. Remember where was Tesla when diluted 2 times in 3 months? Correct. Right before the S&P 500 indecision. Yeah, I don't know. I mean, Tesla, it's a comparable to the squeeze thing, right? But I think Tesla right now, it's not a good buy. Yeah, I'm talking about like the nice tests. Here we go. I've been tracking Tesla too, but I think the company is kind of like going through a turmoil right here, but there might be a bull flag here. Who knows? Let's see. I think you were talking about the split. I don't know when the split happened here. This is a monthly thing. Let's do a daily. There we go. So one split right here. One split right here. 5-1. Is there any other one before this? No. Okay. So this is the split when it happens. Tesla run up. And then another split is kind of coming back down. But yeah, you know, famously, Tesla, quote unquote, is being squeezed right there. But yeah, I didn't understand how Tesla was in the beginning, so I'm not gonna be able to kind of tell you what I think about that. But you know, just seeing the price action here, it's kind of like somebody is squeezing out of the position, forced buy-in type thing, right? Okay, if Thomas Massey, I don't know who that is, passes the bill, the Fed will end. Oh, yeah, I heard about that. I don't know. I mean, it will cause a lot of turmoil though, if that's the case, because people are not going to understand what's going on. But yeah, the Fed has been kind of like integral in, you know, inflating the whole balance sheets of everybody. And that's why, you know, you have the richest country in the world, but still people are homeless, right? Because they are inflating asset that they hold, and the dollar amount that people are going to work day in and day out to obtain and save and all that stuff don't get the buying power that they should. And the people that are quote unquote stashing money away, they get to reap the benefit because, you know, they know what to buy. They know they own most of the important land, just like George Carlin was saying on his comedy show. Yeah, I love George Carlin because like he gave the perspective of, you know, hey, you know, we're all in this together type thing. That people are getting misled into, you know. But anyway, it's political stuff. But just my thought is like, there might be a turmoil there if that were to pass. So the price hit 80 in pre-market. I definitely think it can hit higher. Of course, yeah, it was like halted and not halted. Famously, I guess, Robinhood did some sort of schedule maintenance or something, and when it pops back, GME was like down. And that day, of course, like if you look at the price there, action, that day, it went from 80 down to 37 in one day. So yeah, that's the price volatility that you could expect. And again, this is institutional. Has nothing to do with retail. Gamma Ram institutional buying in those or selling those call option naked, thinking it won't be in the money, and now they are forced to, you know, at least return those shares or hedge in some other way by going back long. So George Carlin is a legend, of course, yes. I know, like, he was talking about it like decades ago before people are understanding that the Republican and Democrats are actually on the same side. Blue and white, red and blue, doesn't matter. They're just there to line their own pocket here. And we see that evident in, you know, the way that they, the SEC, Jay Clayton, you know, famously are Apollo right now. And he came out and say how Roy and Kitty should be in trouble and all that stuff. Really? Are you kidding me? And so, again, like stuff like this doesn't even touch their radar. And they touted, it's like, oh, we're just trying to protect investor, you know, of all sort. Okay, which type of investor are you protecting? I thought you were supposed to be the cop of the stock market here. So, yeah, again, there's a lot of layers to this particular one, but I would implore you to check out. If you're just investing in this company, know why you're investing in it, and at what price point are you gonna be willing to get in. Now I know there's a lot of people like Giga wants to buy over 50. For me, I just don't know if I want to risk that, right? In my opinion, right? And again, you develop your own strategy here. I've been in here for a long time, so I understand the price action dynamic of things. A lot of market participant here. So if you're just new to this, make sure, if you lose money, don't blame it on the actual company itself. It has nothing to do with the company. Price action is people betting up and down, speculating. And there's a lot of mechanic to that. Yes. So have a price point in mind. If you're looking for thousands of dollars here, that's on you. That's a risk that you're taking, right? Again, this is why I have my long-term hold. I have my short-term, just in case I'm wrong about quote unquote the MOAS thing. I get to take advantage of the price action here, Again, my opinion is that it's going to be a multi-year opportunity here. If you're in this company, you know what's what. But the reason why I said 50 is my limit to stop buying is because of this right here. I go by the book value here. And so if GameStop could raise a ton load of money here from this offering, I'm going to increase this cap. Currently, 10 times its book value is a pretty, overextended already price that I'm willing to pay for the actual company as far as the fundamentals, right, of things. So yes, I would be overpaying at 50, but if they are increasing it by another $5 billion, that means this is going to increase. And this is going to be increasing as well. Again, this is my long term. This is my long-term back, long-term holding the company until all of this is true. And then years to come as well. Right? But while I'm waiting for that moon back to appreciate in value substantially, I could take the short-term gain here to, pay off some things. Now, if I'm lucky enough, I might be able to buy a house with this one, right? Who knows? And anything could happen here. But yeah, be prepared at all costs, though. Don't gamble. To me, again, call option unless you understand what strike price to buy, when to buy. You won't, earn thousands of % like these people are telling you to. And understand, if you buy call option and if it's in the money, will you have the money to buy that particular strike price or not? Like I know I saw, sorry, I'm kind of babbling here. I'm kind of towards the end of my stream here, but I will let you go in a minute. Let's see. So of course, there's a lot of Twitter posts here. CEO is brilliant to say the least. He is highly aware of Wall Street got trapped this week, and that's the trap. Has infinite potential. He's throwing a bone into an attempt to diluting the company here. And I think again, this is him saying, hey, if you want to close, this is your opportunity here. I'm giving you a hint. Get out or you're gonna get trapped forever type thing. Right? So Genius, right? This is like, again, 3D chess, the real 3D chess, not the one that Adam Aaron is doing to AMC shareholder. Yeah. Company will benefit either way. Okay. That's crazy. Okay, I'm here to show you something, and I'm stumped. Let me see. How long have I been here? Oh, close to 2 hours. Wow. Okay. All right. I think my mental capacity has spent out. But yeah, I hope you guys are enjoying the price action here. But again, caution to the wind. Please be careful. And if you lose money, do not blame it on the actual company. Okay? The actual company is healthy, is doing well as far as GME goes. If you're in AMC, good luck. You know, don't get burned. Don't get misled to say that GME is the same thing. Okay? It's not. Learn how to read the balance sheets. Learn where to get the information from, straight from the source, right? Don't believe in the media. Now, if you take the media's word at its value, okay, good luck to you as well, because you're not going to understand why the company is doing well. And then, 5 years from now, you're going to buy GME at $500. Maybe, right? Who knows? That's a dream, right? A dream. Will it ever get there? Who knows? Who knows? Anything could happen. See? EPA. Anytime there's price spike like this, the news gonna have the excuse to say, hey, fundamentally, this company is not doing well. Don't invest in it. People are gonna miss out on that particular thing. Like I said, before I let you go, let me end on this. Now, famously, Wedbush is the only analyst, and currently they have increased the price, targeting price, right there. So from 5.6 to $7. Wow, I mean, increase in value over here. So, yeah. Be vigilant, be careful, and understand where you are in this position. If you establish a position already, you are sitting pretty. If you have not, be careful. At what price are you willing to hold? At what price are you willing to come in? Establish the position, and